Livestock markets continue to battle pressure from high grain prices and drought stress out west. But what about global supplies? Farm Journal Stein Morgan takes a look at what USDA is expecting in today's analysis.
Joined now by Mike North as well as John Payne. Well, last Friday, USDA making some revisions to total red meat and poultry production. Looking at higher beef numbers, lower on the pork side of the equation based on the latest hogs and pigs report, and then also increasing milk production based on higher dairy cow numbers. Mike, is there anything there that really stood out that could change the game when it comes to livestock prices?
No, I think from prior reports, the USDA really kind of towed the line. I think, as we look deeper down the road, we should be expecting some sort of bigger adjustments on the poultry side, given what we're seeing on the bird flu story. But, hog and pig report definitely showed retraction in the size of the herd. The milk production report last month saw bigger cow numbers. So the WASDE just kind of followed along in behind some of those other key reports to really kind of tell us what we already knew. And I would say, as we consider the feed cost infrastructure right now, we've got a couple of good months in front of us on livestock. There's decent margins out there, but margins really start to shrink as you get out into summer. And that's where things are going to be problematic for livestock as a whole. And it'll be a real big test as to whether or not we can keep feed usage where it's at.
John, have we seen any concerns on the demand side of the equation? I mean, USDA raising beef exports, but when it comes to consumer demand of meats, are there any red flags?
Well, I think high gas prices and things like that are going to eat into to the demand for beef, physical cash beef. But I mean, in the long run here, this, in my opinion, is a rubber band that's being pulled back. In every single report that goes by, cattle on feed specifically, we see more and more supply, and I think that's a near-term problem that will eventually alleviate itself. And there's going to be a heck of a snapback that's going to come here down the road. The question is really how far out you need to go to be a part of it. So looking out into Q3, Q4, maybe we're a little too expensive in the near term with grain prices where they are. But looking at Q1 of next year and Q2 of next year, those prices are not encouraging any production expansion at all. In fact, you might see cowboys go out of business. So they haven't. The feeder guys have not seen the party yet, and I think they will at some point. So it's like I said, it's only a matter of time, in my opinion.
All right, John, Mike, thank you so much for joining us. Let's take a quick break, and then we'll have much more right here on Ag Day.
To contact Mike, visit www.ever.ag or give him a call at 608-518-3106. To find John's newsletter, This Week in Grain and Oilseeds, head over to www.thisweekingrain.com.